All right, today we're diving into the story of one stock, IRBT, that just had a completely wild day. I mean, a truly explosive move. So the big question is, was this just a one-day wonder, or is it the start of something much, much bigger? We're going to break down the technicals and figure out what the data is really telling us.
And just look at this. This is the number that got everyone talking. A jump of over 21% in one day. A move like that, it's not just noise. It's a signal, and it's one that you absolutely have to pay attention to.
But a number like this, it's really just the headline, right? It's the start of the story, not the whole thing. It tells us what happened, for sure, but it doesn't tell us why it happened. And, more importantly, what could happen next. So that's what this is all about. What is actually going on under the hood here? We're going to peel back the layers on this massive surge, look at some of the really conflicting signals, and see what the raw data has to say.
Okay, first things first, let's build the case for the bulls. Why are some people looking at this chart and thinking, this is it, this is the real deal? Well, it turns out there are some pretty powerful arguments on their side.
And to get the bull case, you have to start right here, with the 200-day simple moving average. Now, just think of this as a huge line in the sand. It's the long-term battle line between a bear market and a bull market. Being above or below this line is a really, really big deal. And boom, that's exactly what just happened. After being stuck in the basement for a long time, IRBT's price didn't just crawl over that line, it punched right through it. For anyone watching the charts, that's a massive green flag. It could mean the whole long-term trend is flipping from down to up. And here's the kicker. This move wasn't quiet, not at all. It happened with a huge surge in trading volume. We're talking over 120% higher than usual. That tells you there was real power, real conviction behind this move. This wasn't just a few people buying, this was a stampede. And the good news for the bulls just keeps on coming. Indicators that track where the big money is going are showing that major players are buying in. The short-term momentum is just off the charts. And here's something wild. Even after that huge jump, the stock is still way down in the bottom part of its yearly range. That suggests there could be a ton of room left to run. Okay, but this is where our story takes a sharp turn. Because for every single one of those amazing bullish signals we just saw, there's another indicator that's flashing bright red. It's a warning that this whole party might be getting way too hot, way too fast. And this right here, this is the heart of the conflict. You've got this massive long-term bullish signal on one side, and on the other, you've got a short-term picture that looks stretched to the absolute limit. So which one do you believe? Now, let's talk about a major red flag. Based on its recent behavior, statistical models predicted the stock should be trading at a much lower price. But right now, it's flying more than 72% above that prediction. It's like a rubber band that's been stretched almost to its breaking point. Sure, it can stay stretched for a bit, but that kind of tension, it just can't last. And the alarm bells get even louder when you dig in. You've got momentum indicators that are maxed out at 100. I mean, the engine is literally redlining. At the same time, the price has blasted so high, it's actually outside of its normal trading channel, the Bollinger Bands. Now that shows incredible strength, but it's a condition that is almost never, ever sustainable. So all of this creates a battlefield. You have these incredibly strong forces pulling in completely opposite directions. The big question is, what are the key levels on the chart that are going to tell us who's winning this fight?
First off, expect some chaos. The data is projecting a huge potential price swing for the next trading session alone, from a low of around 313 to a high near 425. This isn't some calm, gentle uptrend. No. This is a war zone, and you better believe volatility is going to be part of the story.
So here are the lines on our map. Up top, you've got resistance at 461. That's the next wall the bulls have to try and break through. But honestly, the most important number on this entire screen is that primary support at 353. Why? Because that's the 200-day average we talked about. For the bulls, holding that line is everything. All right, let's bring it all home and come to a verdict. We've got a historic breakout, but it's clashing with signs of total exhaustion. So after looking at all this conflicting data, what's the bottom line? Breakout or fake out? The final analysis is actually pretty clear. The breakout itself is significant, it's real, but it's gone too far, too fast. Think of it like an athlete who just shattered a world record. For this new uptrend to be healthy and sustainable, the stock needs to take a breather. It needs to pull back, cool off, and build a solid base before it tries to run higher. And that really boils it all down to two simple scenarios. The bullish outcome? The stock pulls back, but it finds its footing and holds above that all-important $3.53 level. That would be confirmation. The bearish case? It fails. The price tumbles back below that line, and this whole incredible move gets written off as a massive fake-out.
So in the end, the data shows us a stock at a critical crossroads. The battle lines are clearly drawn. The only question left is, can the bulls defend this new ground they've taken? Or was this explosive rally just a flash in the pan?